Okay, so we are looking at in this case here, rights issue. Very interesting stuff. And the moment we finish this, all of us, we go home. We'll not waste anybody's time. Rights issue. How I pray that the examiner this time round gives us a question on this. This is a very serious area. A good examiner wants to throw his students under the bus. They always bring a question on rights issue. So this is a very important area, rights issue. So in this case here, tell us there that rights shares are shares sold to existing shareholders at a discounted price. So any shares in this case, ladies and gentlemen, that are sold to existing, they are sold to who? Existing shareholders. At what here, somebody? Automatically, they'll be called who? A rights issue. How about bonus shares? Bonus shares, they are normally given to existing clients, existing shareholders, but for free. Bonus is 100% for free. Rights issue, rights shares, we sell them to existing shareholders at a lower price. So if the shares, for example, are selling at 10 bob at the market there, and then we happen to be having a rights issue, we can give our shares that we're going to float to our existing shareholders at a price like, say, 4 bob. It has to be at a lower price in comparison to the market price. It must be at a lower price. Now, the most important thing, ladies and gentlemen, in this case here is for all of us to learn how we compute the theoretical X rights price. This is so important. The theoretical X rights price is so important. So this is TERP. TERP in this case here, theoretical X rights price. Very, very important in this case here. Very, very important. Very, very important. X means what here? Without, isn't it? Without. So in this case here, without the promise of these rights, what will be the market value of the share? So basically, when we talk of theoretical X rights price, we are looking at the market price of shares without the rights. The market price of shares without the rights, because of the word X rights, without. Of course, we expect without the rights, this price here to be a little bit what here, lower. So then, ladies and gentlemen, if you allow me, I'll be able to shoot a question right to you here. And I would want to have a scenario, this illustration, where a rights of 1:5 is given to existing shareholders at a discounted price of shillings 8. The normal market price per share is shillings 12. So we are required to calculate the theoretical X rights price. We are required to calculate the theoretical X rights price. So my online students, are you able to see my board clearly? Is my board clear? My online students? Is my board clear? They're saying no. Someone else in this case here, please confirm whether it is a problem from my side or a problem from the student who is not able to see. Not clear. Just a minute. Great. I believe now it's a bit better. Ah, yes. We have also confirmed it's a bit better. Thank you so much. Thank you. Thank you. Clear now. Thank you so much. So then, is there anybody who is able to calculate this theoretical exercise price? Now, here you are supposed to know. We are giving one right for how many? 5. So it will be 1 new share for every 5 old. So this is 1 new. It's 1 new share. 1 new share for every how many? 5 old. So you'll get in this case here some students, and I believe this is basically Satan, because these are bright students. This must be Satan who speaks to them, to their ears, at a very, very low sound, but strong sound. So they get students in this case here mixing up the two, that it's 5 new and 1 old. Can it happen that we have a company that gives more new shares really as compared? No, then you will dilute everything. It's not possible. The lower figure must always be the new. We are issuing 1 new. For every 5 shares that you have, we give you 1. It cannot be the other way around. So do we have the price of this new share? Do we have the price of the new share? The discounted one, isn't it? Because the new share is the right. So in this case here, 1 new share at how much here, somebody? At 8, isn't it? And then we have 5 old shares at what year? At 12. At 12. So in this case here, 1 times 8 gives me how much? 8. And then we have a 5 times 12 giving me how much? 60, yeah? 60, like that. So please go ahead and add the 2. You go ahead and add the 2. Somebody talk to me. Talk to me this morning. Talk to me this morning. So I'm able to see 60 what here, somebody? 68. So in this case here, this value of 68 will be for how many shares now? Because we know that 1 share is 8. 5 shares is 12. So 68 will be for how many shares? 6. You add this side as well. So 6 shares now. So 6 shares equals 68. 6 shares equals 68. Then how about average price? What would be the price then per share here? The average price. So in this case here, the average price will be my theoretical exercise price. So you come and tell the examiner, therefore, the TERP will be the average. The TERP will be the average here. And average will be 68 divided by what here, somebody? 6. 68 divided by 6. So is there somebody who is able to give me this figure? 11.33, isn't it? 11.33. 11.33. I'm so sure in an exam situation, all of us would have gotten this correctly. The TERP, isn't it? It's called TERP. It's very easy to calculate. Then I would want us, ladies and gentlemen, I would want us to look at a past paper question. A past paper question. I wish I was the examiner. I wish I was the examiner. I would have brought theoretical exercise price question this time around. So I would want us to do November 2017, question number 2. November 2017, question number 2. November 2017, question number 2. There must be a student who has left some ringtone somewhere. And you see at my age, such small things can give me high blood pressure. Especially when the ringtone is not very nice, isn't it? If it's very nice, soothing, we like. Sorry, November 2017, question number 2, boy. November 2017, question number 2, boy. Question number 2, boy. November 2017, question number 2, boy. My online guys, have you gotten this question? Please, we have gotten it. Could you kindly mention there why for yes? Have you gotten the question? Great. How about the online guys? Are they able to confirm whether they have gotten the question? November 2017. November 2017. November 2017. These guys are not talking to me. I don't know why. They are not talking to me. I don't know why. No, thank you, Yvonne. November 2017. Question number 2. Question number 2. November 2017, question number 2. I really love Kiswahili. I love Kiswahili more than any other language. This examiner is a good examiner. He uses Swahili names. 𝒔𝒎𝒻𝒍𝒐𝒏 Limited is an all what year? Equity financed. Is an all equity financed company. Has an issued share capital of how many shares? Shillings 10 million ordinary shares of shillings 10 per value. Of shillings 10 per value. The company paid a dividend of shilling 0.4 per share last period. And the market price per share is how much? 20. Ex-dividend. I like ex-dividend. Good stuff. The company is contemplating raising additional funds through a rights issue, isn't it? Through a rights issue. Just 1 minute. 1 minute. The students who haven't yet gotten this question, let's wait for them. We're not in a hurry. The world is not coming to an end today. The world is not coming to an end today. Great. So now do we have the question? Do we have the question paper? Yes. So I'm reading again. 𝒔𝒎𝒻𝒍𝒐𝒄𝒌 Limited is an all equity financed company, has issued a share capital of shillings 10 million, ordinary shares of shillings 10 per value. The company. Now, ladies and gentlemen, if I'm the one doing this question, I can easily pick up mark without even knowing what I'm doing. Because when I see share capital is 10 million, and I'm seeing per value there, the next thing I should think about is number of ordinary shares. We don't call it that way, my students. When I see share capital of shillings like that, and I'm seeing per value, I'll always think about my nose, which is share capital divided by what here, somebody? Per value. At least I've been able. No stands for what here, number of ordinary shares, yes. Nose. So the share capital given here is shillings what here, somebody? Over shillings what is the per value? 10. So as other students are only looking at the ceiling as if they are expecting goods for free stuff from heaven, you're writing something, isn't it? Yeah, at least you've known that the number of shares are how many here? 1 million, isn't it? Great. 1 million shares. You double underline. 1 million shares, and then you double underline. 1 million shares, and then you double underline like that. Is that okay? Great. Can you imagine? I'm reading the first paragraph and I'm getting a mark. That must be the grace of the Lord. The company paid a dividend of shillings 0.4 per share last period, and the market price per share is shillings what year? When I read that line, somebody who is very bright, can you talk to me this morning? When I read that line, what should I be thinking about? I'm seeing dividend, I'm seeing price. No, there is something there. Because you see, the shareholders, when they give us money, we are giving them dividends, isn't it? So there, the thing that I'll be able to see is the cost of what here? Equity. The Kenya thing, isn't it? Because it is DO into something, PO. At least I should be able to think like that. That's how, in this case here, I differentiate myself from a student who is very good in home science, isn't it? The company is contemplating raising additional funds through a rights issue. The management has proposed a 1-for-4 rights issue at an issue price of how much? That must be a discounted price, because you can imagine, not even imagine, remember that the market price up there was how much? 20 years. It was 20. All right. The funds raised are intended to be used to finance a major new project which is expected to increase the company's annual after-tax cash flows by $950,000 in what? So you as a student of finance, when you hear that word perpetuity, what comes to your mind? Infinity. So formula of getting something infinite. No. Irredeemable. No. You guys haven't yet gotten that. You haven't yet gotten that. We shall overcome. We shall overcome. So if you're told in this case, ladies and gentlemen, in this case here, we have some lady here called 𝒂𝒂𝒕𝒊𝒐𝒏. That 𝒂𝒂𝒕𝒊𝒐𝒏 has somebody who has promised to be giving her 1 million per annum, where N is infinity. And then the cost of capital is 10%. Then what will be the present value of 𝒂𝒂𝒕𝒊𝒐𝒏's investment here, of 𝒂𝒂𝒕𝒊𝒐𝒏's promise? Somebody in this case that is an infinite. So in this case here, present value will be the annuity amount over what here? Somebody will remember? Is there somebody who is able to remember this kind of a concept? They have forgotten, eh? Or you remember 1 over R. But now here you have the amount, isn't it? Because 1 over R is the PV far. When I want the PV, it will be annuity amount over who? Over R. So the annuity amount, ladies and gentlemen, the annuity amount here is 1 million, isn't it? Over R of what here, somebody? You see, R is the required return, which is the same as what your cost of capital. Cost of capital, yes. Which will end up giving me how much? You don't have to use a calculator there. 10 million. Thank you so much. 10 million. 10 million. So anytime you hear of the word the amount over R. Perpetuity means amount over R. Where R is the required return, where R is the cost of what here? Capital. Cost of capital. Now, ladies and gentlemen, I would want us to start tackling this question by getting the present value of this perpetual cash flow. So if I'm the one doing this question, this is what I will do. I'll get, in this case, to a clean page, clean sheet there, and then I'll write in capital letters to scare the examiner a present value of, even without reading the question, this is where I will start from. Present value of perpetual, what here, somebody? Cash flow. Present value of perpetual cash flow. Present value of perpetual cash flow. Present value of perpetual cash flow. We shall overcome. Present value of perpetual cash flow. Let's see here. Now, ladies and gentlemen, this perpetual cash flow, the amount is how much? I'm alone. The amount is 950,000 per annum, isn't it? Now, the cost of capital has not been given in this question. The required return has not been given in this question, so you must calculate it. And how do we calculate this? We know that this should be the 𝒂𝒂𝒕𝒊𝒐𝒏. The W, what here, somebody? ACC. And WACC will be weight of equity, cost of equity, isn't it? Plus weight of debt, cost of debt. After who, somebody here? After tax. This will not be there in our equation. Why am I canceling this? Because Maji Mazuri is an all equity financed company. It doesn't have debt. This is all about debt. So then the only thing that I will calculate here is the cost of what here? Equity. Because even weight of equity now is 100%, is 1. So then I only need cost of equity. So to get cost of equity, do we know the formula of cost of equity? It is Shagwa, isn't it? Yeah. District officer. Who grew to become deputy president, isn't it? Yeah. All over who? Of course, at some point, he must have become a provincial officer, isn't it? Here, we don't have anything to do with the flotation, isn't it? And then as if that is not enough for this guy to have jumped from DO to deputy president, he must have grown twice, eh? So 2 growth rates, isn't it? Always. To get KE, we are looking at 2 growth rates. 2 growth rates. So then can you kindly do mwalimu here a favor? Can you kindly do mwalimu here a favor? Kindly do mwalimu here a favor. Somebody do mwalimu a favor here. Do we have DO? DO is current dividends, isn't it? Current dividends. How much? 0.4, isn't it? So current dividends, I'm being told the current dividends, they are 0.4. Thank you very much. Has this examiner really given anybody's growth rate? In this question, no growth rate, isn't it? In this question, no growth rate. In this question, there is nothing like growth rate. All right. Then come here and give us, ladies and gentlemen, the PO. PO is the current market price per share. The current market price per share. Current market price per share. Is there somebody who is able to see the current market price per share? Oh, yeah. Oh, yeah. Current market price per share. How much are we selling these shares at the moment? 20 years. 20 years. Thank you very much. Plus growth rate again, which is what here? 0. Growth rate is 0 there. Growth rate is 0. So then could you kindly give me this cost of equity? The cost of equity. Give me this cost of equity. Give me this cost of equity. Give me this cost of equity. The online students, where we have reached up to here, where we have reached, are you guys able really to follow what we are doing? Please try to motivate mwalimu. Try to motivate mwalimu. You know, even like where I go to church myself, at times in this case here, for purposes of motivating the pastor, even if he has spoken nothing, at times I stand up and say hallelujah, isn't it? Which gives us 0.02. Same as 2%. 2%. So the physical guys, I expect you guys to be standing up at times, isn't it? Because you must motivate mwalimu here. You must motivate mwalimu. Great, great, great. Thank you so much. Now, once I've reached here, then I'll easily give you the present value of this perpetual cash flow. I'll easily give you the present value of the perpetual cash flow. This is the first thing that very many students of financial management fail in, this one here. So present value, where n is infinity, will it be amount divided by who? Divided by R, isn't it? And the amount you guys gave me was what here? 950,000, isn't it? All over R, the required return. Remember this, we only have equity investors who are demanding what percentage from us? 2%. Do you remember the 2%? 0.02. So then in this case here, the present value will be equal to what here, somebody? $47,500,000. May God help us accountants. We write many, many millions, and yet we earn peanuts, but we shall overcome in balance sheets. Great. Thank you very much. It doesn't stop there. Once you get present value, you would want to get net present value. It doesn't stop there. You must give us what we call net present value. Net present value. So then how do we get the net present value? I would want to take the total present value minus something. Minus something. Minus initial outlay, isn't it? Minus initial outlay. Minus initial outlay. So where do we get this initial outlay from? Where do we get the initial outlay from? The initial outlay. Remember, we are raising new funds out of a rights issue to be able to invest in this project, isn't it? So then the initial outlay, the entire amount which will be raised here will be put into this project. So in short, the initial outlay will be exactly equal to the new funds raised. So right there that initial outlay equals initial outlay equals the new funds raised from the rights issue. 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 So then here I would want in this case here to pause a little bit, to pause in this case here for a photo, the old way, isn't it? And give you 2 minutes to see who will be able to give us the amount you're going to raise out of this rights issue. And then once you give me the correct answer, I give you 50 bob. I don't want that one. Go away, your 50 bob. We shall overcome. How much are we going to raise out of this rights issue? How much are we going to raise out of this rights issue? How much shall we raise out of this rights issue? Okay. So then what do we have here? Okay, ladies and gentlemen. So in this case here, what we have here, we know that the rights issue is 1 out of what? 4 times, in this case here, the old number of shares. If we do it this way, we shall be able to get the new no's. The new number of shares will be 1/4, 1/4, times the old number of shares. So in this case here, this will be 1/4 times the old number of shares. Is there somebody who can remember the old number of shares? 10 million or 1 million? Remember, we got some no's somewhere, isn't it? How many shares? The 10 million is in shillings, isn't it? And I wanted to get what here? Number of shares. Number of shares where we took the 10 million divided by 10, isn't it? Which gave me what here? Somebody, a million. So if that is the case, then this will give me how much here, somebody? 200? Use your calculators. 250,000, right? 250,000. And then these guys, ladies and gentlemen, who are giving us this money for me to be able to get the total amount raised. Total amount raised. So for me to get the total amount raised, I will take the 250,000 new shares under the rights. And we know that these guys are giving how much per share? They're giving us 15, isn't it? They're giving us 15. They're giving us 15. They're giving us 15. So please give us the total amount raised. $3 million. 3,750,000 what year? 1,000 like that. Now, ladies and gentlemen, this is the amount you're going to raise and invest in our project, isn't it? So we're investing in our project, which is able to give us how much? Who is able to remember the present value of our project? Was it 47 million or something? Do you think that investment really makes sense? That you invest 3.75 and then you get 47.5 million? Not unless you're selling drugs, isn't it? So this was an error from the examiner's perspective. So we have to agree. Either we do it the way it is going to give us very many or rather big type of values, which will not be making sense. So we agree. Either we delete that shillings, ibaki 10 million what ya shares, ibaki 10 million shares, ama tuongeze kuwe shillings 100 million. Because at the end of the day, what will only make sense in this question is if this number of shares here are how many? If they are 10 million. So we must agree. It's unfortunate that at times our examiner does make mistakes, quite unfortunate, but we shall overcome, isn't it? So let's agree. Which one do you think is better? We make it 100 million. I would rather we just delete that shillings. We delete the shillings like that. Let's delete the shillings. Let's delete the shillings. Let's delete the shillings. So then if that is the case, this one now will give me 37 million, isn't it? So please, this will be 2.5 million now. This will be 2.5 million now. 2.5 million times 15 will give me how much here, somebody? My camera has an issue, 1 minute. 37.5, isn't it? So then can you kindly give me the net present value? Great. So can we continue now? It's coming up in a minute. So the online guys, have we agreed that we are working with 10 million shares? The online guys, have we agreed we are working with 10 million shares? Let's start from there. 10 million shares. Thank you very much. We shall work with 10 million shares. And if we do that, then we shall be able to raise how much here? 37,500,000 what here? Thousand, isn't it? 37,500,000. And therefore, the net present value itakuwa ngapi? Net present value. So the net present value here will be 47.5 million minus 37.5 million, isn't it? Which gives me how much here? 10 million, isn't it? Now, whenever they give you questions to do with TERP, when you get this net present value for TERP, when you get net present value, you must come here and give us what we call net present value per share. Per share. So per share, you'll take in this case here the net present value created, you divide by the existing shares. Existing shares are how many? Now these guys have lost them. I've lost all of them because we made a change. Because we made a change in a KASNEB question and they're believing 10 million, isn't it? So in this case here, we have 10 million shares. So then this gives us, ladies and gentlemen, what NPV in this case here per share? We're getting 1, isn't it? We are getting 1. It may not make sense for now, but you will see how important this thing is. That we are doing a rights issue, we invest in a project, and this project is able to yield some net present value, and I've been able to get net present value for what here, somebody? Each existing share, which is what here, somebody? 1 bob, which is 1 bob. Now let's read the questions here. Let's read the questions. So number 1, required. Look at the requirement. Look at the requirement. Number 1, they want us to give them the CAM rights. The CAM rights, market price per share, after the announcement of what? The rights issue. So here you can't tell me that Mwalimu add dividend. No, this is a rights issue question. When we do this rights issue, we can see what is going to happen is that this rights issue amount will be invested in a project which is going to yield an extra value of shillings. How much here per share? 1 per share, isn't it? And therefore, the CAM rights price, the CAM rights market price will be the existing market price plus NPV per share, Because in this case, here, this is the CAM rights price after rights. And these rights will be invested in a project which will basically give me a new net present. What here, somebody? A new net present value. This approach, we only use this approach whenever we have what we call a rights what here? A rights issue. So then somebody talked to me this morning. What is the existing market price per share? Now I'm alone. I'm so sure I'm alone. It's 20, isn't it? And then, ladies and gentlemen, this NPV per share that we got here is how much? 1. So therefore, the CAM, when we make the announcement for these rights, after the rights issue has come to fruition, our market price per share will grow by 1. It will become how much now here? 21. To become 21. Very few students normally end up getting this kind of a question. Very few students. But of course, you will be among those few students. If you were religious enough, like my sister here would have said what here? Amen. Yes. Great. 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 Now, I'm so sure you guys have understood, of course, very little. But one thing I can guarantee you is that by the time I'm doing the second question, you'll get used to this. It's an easy thing. It's an easy thing. It's a very easy thing. Great. Now, straight away, let's now go to part 2 of this question. Part 2 of this question, they want us to give them the theoretical X rights price per share. They want us to give them the TERP. For me to be able to give you the TERP, what I need to know is the ratio. This ratio that they've told me is 1 is to what? Where are you getting 5 from, honestly? Or 5 is for the other example. This is 1 is to 4. So once you tell me that this is 1 is to 4, then ladies and gentlemen, what I will do, I will come and arrange this in form of a table. Say 1 what here, somebody? 1 new, and then how many old? 4 old. 4 old. So the new shares will be going for how much? The new shares. You know, the new are the right shares, the ones in this case here given out at a discount, which is 15, isn't it? 15. How about in this case here for the old ones? The old ones. Somebody talk to me, the old ones. The old ones are coming to us at 20. They're not talking to me, these online guys. The online guys are not talking to me. What is the price of the old ones? The price of the old ones. $20, $21, $21. Why 21, ladies and gentlemen? It's because now, because of these rights price, our share is pregnant, isn't it? Yeah. So now that price of 20 becomes irrelevant moving forward. Actually, if I'm the one doing this kind of an exam, I'll even go to where that 20 is written and delete it totally. I should not even see it totally. That 20 is a useless figure. Now, because of the theoretical X rights price, our share, because of the rights issue, our share has gone up by what here, somebody? By 1. So from today, we shall be valuing each share at how much? At 21. At 21. So could you kindly go ahead and give me these figures here, somebody? So, and today I'm going to give a very good present that I've never seen, that you guys have never seen. You'll be surprised. For any student who is attentive, even if you are following us virtually, today you'll get a present which exceeds your school fees. So 1 times 15 gives me how much here, somebody? 15. 4 times 21 gives me what here, somebody? 44. 84. So then go ahead and add 90, 99. Thank you very much. For how many shares? Somebody talk to me. Somebody who is online. For how many shares? Thanks, Dennis. For how many shares? For 5 shares now, isn't it? For 5 shares now. Therefore, the TERP will be the average. The TERP will be the average. So the average here will be 99 divided by who? Divided by 5. 99 divided by 5. 99 divided by 5. Yvonne tells me 19.8. Thank you so much. Yvonne tells me 19.8 like that. So many students in this case here would have used what here? It would have been 20 if in this case here we were not given anything to do with a new project. When they tell you, for example, like the rights issue is this 1:4, and then they don't mention anything like investing the amount, then you would have used 20 comfortably. But when you are told that this new amount will be going into some venture, that venture will be giving you 950,000, then you must end up giving us what we call net present value, and it has to be net present value per what? Which you add to that 20 to get it to 21 like that. Great. So if I'm the one doing this in an exam, I can even come and draw an emoji. An emoji in this case, which is what you're smiling. You draw an emoji which smiles right back at the examiner, which smiles right back at the examiner. Do you think the examiner will take offense by these kind of emojis? We shall overcome. We shall overcome. Now let's go to number 3. So number 3, the theoretical value of each rights price. The theoretical value of each right. Now the right itself. What is the theoretical value of each right? Theoretical value of each right. Now, ladies and gentlemen, how do we get the theoretical value? We call it value of a right. Value of a right. This is very easy. You simply take the existing MPS minus the TERP. Existing MPS minus who? Minus the TERP. Existing MPS. Now the time for that present is here. Can somebody give me this existing MPS? 21. It cannot be 20 because 20 we said delete. Delete that from your mind and from even your examination paper. So it is 21. How about in this case the theoretical X rights price? 19.8, you're right. 19.8, you're right. So 21 minus 19.8 gives me how much? What is the value of that right? 1 point. 21.2. 1.2. Thank you so much. That is the answer. That is the answer. And by doing those 3 things, you'll end up getting how many marks? Total number of marks are how many? 8 marks. Are they enough to take you to places that you've never seen before? Yes. 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 We shall overcome. We shall overcome. I'm so sure right now it may not be able to make a lot of sense, but once I do the second example, this thing will become very easy, and all of us now should pray that the examiner does what you brings it. But of course, for now, I'm so sure there must be somebody saying, hey, this one should not be brought by any good thinking, right thinking examiners. Great. Now look at part C of this. I love part C. Part C, they want us to evaluate the impact of who? Rights issue in B above on the value of what here, somebody? Worth of an existing shareholder who holds how much here, somebody? 1,600 ordinary shares in 𝒖𝒍𝒐𝒄𝒌 Limited. And this guy seems to not to be very rich. And the shillings, how much here, somebody? 10,000 in his savings account, assuming that this shareholder decides to do what here, somebody? Exercise all his rights. That's number one. That's number one. And then number two, sell all his rights. And then number three, ignore the rights. So then what do you think, ladies and gentlemen, in this case here, should we do? Very easy. I will start by scaring the examiner. So you write a title and you underline, isn't it? So you write C Roman 1. You write C Roman 1. So C Roman 1 in capital letters, you write exercise all what here, somebody? Exercise all his who? And then you underline, you underline, you underline. If he's going to exercise all his rights, then how much in this case, ladies and gentlemen, how much in this case, ladies and gentlemen, will he get? Now, the first thing that I will do here, I would want to value this investor. As things stand right now, how does his balance sheet look like? How does his balance sheet look like? This guy, in this case here, before, we write there, in this case here, value, or rather wealth. Wealth, in this case here, before the rights. Before exercising the rights. So this guy has got ordinary shares. Are you seeing he has got some ordinary shares? Oye, mbesha shigana. Kwanza shares ngapi yako nazo ujamaa? Ujamaa hakumpea jina sijui kwa nini. 1,600 shares, isn't it? And each share that he has is worth how much? 21. It cannot be 20. We're not going to talk about 20. No, it's forward ever, backward never. Just like Christianity, isn't it? We can't go back to 20. Now, in this case, these guys' shares are worth at how much here, somebody? 21. So what is 1,600 times 21? Somebody give me a figure. Somebody give me a figure. 33,600. Is that okay? Online guys, are they able to see my board, really? The online guys, are they able to see my board? Thank you. When they mention like that, that's very good. So what else does he have? This guy has got some chicken. No, he has some cash at bank. Cash at bank, yangapi, somebody? 10,000, isn't it? Yes, cash at bank of 10,000. So in this case here, then his wealth is worth how much here, somebody? 43,600, isn't it? Now, so in this case here, this is the first thing. What about then if he goes ahead and exercises? So if he goes ahead and exercises all his rights. If he goes ahead and exercises all his rights, what is going to happen? So if he exercises all his rights, he will still be having the old shares, remember, isn't it? Old shares ngapi? 1,600, isn't it? Times what here, somebody? 21, isn't it? Times 21 still. Times 21. Mbesha shigana. Huyo ameanza kushtuka huyu. Sugar zimeanza kushuka. Sugar zimeanza kushuka kwa mwili, we shall overcome. Remember, ame exercise rights, atabaki bado na zile zake za kitambo, alafu new shares hapa chini. So old shares, 1,600 times 21, which gives me how much here, somebody? 33,600, isn't it? But now remember, he's going to get new shares, isn't it? He's going to get new shares. He's going to get new shares. New shares takuwa si rate ni a quarter. So a quarter of 1,600. And out of these new shares he's buying them at how much? 15. He's buying them at 15. Hapa mwanafunzi mjanja, unajua hii figure ambayo utapata total hapa chini lazima ikuwe 43,600. So unajua hivyo? The total wealth hapa lazima ikuwe the same, eh? Whether you lazima ikuwe the same, right? Lazima ikuwe the same. So hata unaweza achia hapa chini uandike 43,600 alafu ufunge macho we. Kwanza nipatie figure kwanza hapa. Wewe unipatie figure sasa. A quarter of 1,600 times 15 gives me how much? Can somebody give me this figure? 16,000. 6,000. So then this gives me 6,000. This gives me 6,000, isn't it? This gives me 6,000. And then in this case, ladies and gentlemen, come and give us now cash at bank. So cash at bank. Cash at bank itakuwa ngapi? Hapa ni wapi? 4,000. Umetoa 4,000 wapi? Because this guy in this case here alikuwa na 10,000 na in this case ametumia ngapi pale? 6,000. So in this case atakuja baki na ngapi somebody? 4,000. Sasa hebu ongeza zote mbesha shiga na 43,600. 43,600. 43,600 like that. The online guys, are they able to follow really? The online guys, are you able to follow? The online guys, are you able to follow? Online guys, I would want your feedback. Please be very honest and give me the proper one. If you're not following, tell me I'm not following, and then I'll be able to know what to do, because this video, yes, Grace, thank you very much. Thank you very much. Thank you very much. Now, that is if he exercises all his rights. So number 1 is gone. So then we go to number 2 now. Or rather, before I go to number 2, listen, what some other students will always do here. What some other students will always do here is this. Some students will come and tell you, Mwalimu, this is a very long way, a very bad way. What if in this case here you do it this way? You say now that this guy has got 2 types of shares. He has got 2 types of shares. He has those old shares, 1,600, isn't it? Plus the ones that you'll get by the rights, isn't it? And then all these, you come and value them at the TERP, which is 19 point what here, somebody? You value them at the TERP, this method 2. So could you kindly give me this answer? 1,600 plus a quarter. These are the old and these are the new. And because I put them in the same basket, I'm now valuing them at the average price. 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 $34,650. $34,650. $34,650, yeah? Are you sure? Please use your calculators very well, because you know, this is 400 plus 1,600, that gives me 2,000, isn't it? Times now 19, it can't be 34,650. Let me now rely on my online students. No, don't be sorry, never be sorry. 39,600. Great. Then this will give me 39,600, isn't it? This will give me 39,600. Is that okay? Now, if you go that way, does he have any other asset? Yes. He has, in this case, here some cash, which we left, isn't it? Remember, he started at 10,000, but now he has bought shares. Number of shares he bought are a quarter of 1,600, this new. And each share was worth how much? 15. So then in this case here, we'll be left with how much in terms of cash? $4,000? Are you following? Sure. No, I think that mirror is messing me up. That mirror is messing me up. That mirror is messing me up. We shall overcome. That mirror should be removed. So in this case, at the end of the day, it should be 43,600, isn't it? Should be 43,600. Is that okay? 43,600. 43,600. So let's agree as a class. Which method should we be using? The first or the second? It depends on the individual. I like that. Great. Dennis, second. But what you have said in this case here, we have some lady here called Vaska. Amesema kila mtu ajipange, ile ambayo ameelewa. Which I agree with, isn't it? Which I agree with, yes. Which I agree with, yes. Yeah. Kila mtu ajipange hiyo. We shall overcome. Now, then we go to Roman 2. Is that okay? So Roman 2, in this case here now, what if he doesn't buy those shares, but he sells the rights? He sells all of them. He sells his rights. So in this case here, Roman 2, the investor sells all rights. The investor sells all rights. if he sells, if you're ready to say she, isn't it? Because they never gave us the name of the guy. So it could be either a he or a she. So if he sells all the rights, isn't it? All the rights. So do his balance sheet statement. Do his balance sheet statement. Do his balance sheet statement. Even if you understand nothing, you'll be able to get a half a mark there by starting with old shares, isn't it? Start with old shares always. Start with the old shares. So abracadabra, let's see. I'm waiting to see if he sells all his rights. Let me help you. Let me help you guys. If he sells all his rights, of course, in this case, his balance sheet, we are going to have his old shares, isn't it? So his old shares. And then number two, we are going to have cash at bank. Cash at bank will remain at 10,000 this time around, isn't it? Because he's not buying shares. And then he's going to sell rights, isn't it? So in this case here, we have here cash proceeds from sale of rights. So remember the rights this guy is going to sell are 400. These guys are not talking to me. The rights are 400. Always you use the shares that are there. So you pick in this case here 1,600 times value of a right. Quite confusing, but you shall overcome. So 1,600. So here you don't make the use of that a quarter. You take 1,600 times value of a right. Do you remember value of right which calculated in part 1, which was 1.2? So just you take 1,600, the same case here with 1,600. If you want to master this thing, 1,600, 1,600. So 1,600 times 1.2 gives me how much? Somebody give me this figure. We shall overcome. Hakuna kuovercome hapo. Hiyo umetudanganya. Si ni kweli? 1,600 times 1.2 gives me how much here, somebody? 1920, the year that I was born. Yes. So when we come in this case here to these old shares, these old shares, ladies and gentlemen, what value should I use here, somebody? What value should I use here, somebody? 21, that's a lie. Always in this mathematics, because you are issuing what here, somebody? Rights. And that is why method 2 above, even for the other question, will be 19.8. Will be 19.8. So could you kindly give me this figure? 1,600 times 19.8 gives me how much? They're not talking to me. I don't know why. 31? 31, 68, isn't it? 68. And then come and add. Of course, if you are correct, it should add up to 43. What here, somebody? 43 something. 43? 43,600. 43,600. 43,600. Should add up to 43. Should be the same, yes. So actually, what some students you have seen, some students doing, they always copy. Like when they have the first table, they copy that first table on the second part and on the third. You can easily cheat the examiner that you know what you are doing. Wengi, they don't look at that. Like it's important that you do the right thing, isn't it? Because it's about also ethics. You don't want to pass in a bad way. But once you're a member of ISPAC, okay? Okay, I know this is quite a difficult area, but tell me, what have you understood here? What have you understood, even if it's just one item? Mm-hmm. 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 Mm. The bank. But you see, he has a right. He has some rights he's selling, isn't it? Because you've been told here in Roman 2, good argument. They've told us there in Roman 2, if he sells all his rights, so how will you handle that selling of his rights? No. I'll repeat this. We look at Roman 3. What if now he ignores the rights issue? This is quite interesting. Now you should be able to do it. If he ignores the rights issue, what will happen now? If he ignores the rights issue, 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 I'll repeat this, if he ignores the rights issue. If he ignores the rights issue, so if he ignores, he says, I'm going to do nothing, ignores rights issue. So if he ignores the rights issue, here we don't expect to get that for 3,600. If he ignores the rights issue, so of course he will remain with his shares, isn't it? So the old shares, how many were they? Times what price? Times what price, my online guys? I'm waiting to see. My online guys. Times 12. Where? 20. That old 20 thing. You. Remember, even if you ignore selling your rights and other people sell their rights, the price must be diluted in the market. The price must be diluted. In these tables, we shall not be using 21 anywhere. We shall always be using 19 point what here, somebody? 19.8. We shall always be using 19.8 in these tables. I like that. Watakuwekea sababu wengine wamesha exercise. Shares may increase. Shares can increase. What happens to the price? It goes down because now, of course, the supply in the market is huge. It's huge. So it has to be 19 point what here? 19.8. It has to be 19.8. Which gives me 31,680. And then, of course, we have cash at bank. This bagger, the cash at bank, itabaki ngapi? At least there you guys will get a mark, isn't it? Yeah. So come and add, because now here, he doesn't have any rights he's selling. He doesn't have any rights he's selling. He doesn't have any rights he's selling. All right. So in this case here, that gives us what here, somebody? 41,680. So is he better off? No. So, and that is why you're always told, whenever you are having shares in a company, like KCB the other day had a rights issue, don't ignore. If you ignore, your wealth will go down. You must do something. It's either you buy yourself those new shares or you sell your price. You must do something. Doing nothing is very, very costly. And I would want to repeat something here. I would want to repeat something here. So, and I would want to basically do Roman 1. I would want us to do Roman 1. Roman 1 of this question, they wanted us to exercise our rights, isn't it? And buy a new share. So how will this wealth look like? How will this wealth look like? So the new shares, first of all, the new shares will be a quarter over the ones you have, isn't it? A quarter of 1,600, which will be how many? 400. So then the balance sheet valuation, so we talk over, in this case here, the value of the shares, value of shares. So how many shares does this crazy guy have here? He has 1,600 plus how many? 400, isn't it? We come and multiply this with what here, somebody? 19.8, isn't it? Which will give us what there, somebody? $39,600. From there, we come and do what here, somebody? We give him cash at bank, isn't it? So we have here cash at bank. So cash at bank, he began with 10,000, isn't it? But remember, he has bought 400 shares, isn't it? And each share cost him how much? 15. Each share cost him 15. So then cash at bank in this particular case will be how much? 4,000, 4,000. So this gives us 4,000. So if you add, how much are you getting here, somebody? 43,600. Thank you very much. That's number one. Number two, I would want to repeat this again. Number two now is where they want us to sell all our rights, isn't it? We sell all our rights. We're not buying. We are selling all our rights. So come here. We are selling all our rights. So remember, here is where we exercise and buy new shares. Buy new shares. And buy new shares, buy new shares. So in this case, ladies and gentlemen, what we're supposed to do now, the second scenario is basically where we sell the rights. So sell the rights, sell the rights. So sell the rights. So when you sell the rights, what do you have here? When you sell the rights, what do you have here? When you sell the rights, when you sell the rights, when you sell the rights, when I sell the rights, of course, the shares that I'll be having will be how many? 1,600, isn't it? All right, but at how much? 19.8, isn't it? Because other guys, of course, we expect the price to be diluted. So 1,600 times 19.8, this will give me how much? 31,680. 31,680. And then we have cash at bank. We have cash at bank. So cash at bank yangapi? Because remember here is not really going to touch that money, isn't it? So cash at bank 10,000. But now remember, there is also cash proceeds. Cash proceeds from selling who? His rights, yes. From selling his rights. From selling his rights here. Now, there is something you're supposed to know. Something you're supposed to know. The 1.2 that we got, the value of a right that we got, 1.2, is always value per old share. It's value per old share. We call it value of a right, but attached to each of those old shares that you have. So it will be 1.2 times what here, somebody? 1,600 that the guy has. 1.2 times 1,600. Which will end up giving me what figure, somebody here? Which will end up giving me what figure? 1920, which will end up giving me 1920. So when you add here, you'll be able to get the 43 what here, somebody? 43,600. 43,600. So does it make some sense? Normally what I tell my students in this case here for this right, selling the rights, whatever shares you have here, you always use the same number of shares. You can never go wrong. Same number of shares here. 1.2, it was 21 minus 19.8. We got this one in Roman 3. We got it in Roman 3. We got it in Roman 3. In Roman 3. Okay. So the online guys, are you comfortable a little bit? Are you comfortable? You can never be comfortable in this world 100%. We only look at some form of comfort. The online guys, please, I want your feedback. Are you comfortable somehow? Somehow, at least if you got this kind of a question on exam, will you be able to get like 4 out of say 7 marks? Somehow. Great. Thank you so much. Thank you so much. Thank you so much. Great. Then, ladies and gentlemen, I would want us straight away to, and by the way, this particular video, I'll be uploading it on YouTube, right? Because it's a free of charge class, which I would expect you guys to go and watch them severally, And of course, as you watch, take this Mwalimu International and ensure that you're subscribing, isn't it? And sharing this with all your friends and enemies, right? That's how you promote.